underdogs.
What's up, guys? I'm currently back at the apartment. So we just took a train trip to Bandung to visit my friend who was building a restaurant there. And yeah, just needed a couple days off. Been feeling a little bit of burnout, honestly, recently, which I want to talk a bit more about later. But currently, we have a trade running in Aussie dollar. We are still currently in drawdown, as you can see here. Oh yeah, that is a big drawdown right there. We might get taken out for the L. I had another missed trade on Monday that would have been an amazing position. We're gonna break these two positions down, the one I'm currently in right now, and the missed trade I had on EURCAD on Monday. I think this week has been pretty tough, honestly. Even last week was kind of tough. Although last week was, yeah, I had one win in Aussie Kiwi, but only one trade for the week. This week also one trade for the week. Yeah, it's been tough, man. These past 2 weeks have been lower frequency trades. Markets have been delivering just shittier price action. And so this is how we're just trying to stay afloat, you know, like I'm overall quite happy with my level of patience, discipline. I didn't let myself take stupid trades, you know, no temptations that I fell into. But the only thing I'm not happy with is missing the trade on Monday, which was, to be fair, kind of a difficult one. But don't worry, we'll talk about all that soon. I want to talk about the missed trade. Now, this is quite painful, right? This is the missed trade on Monday, EURCAD. Fuck my life, man. This would have been like, oh, but yeah. So, starting from the daily here, EURCAD. This is our key resistance level. Price has captured extended liquidity from it. And at this point, we haven't received this bearish engulfing candle just yet, right? We were still here for our chart. This is what we actually see. We find this beautiful ascending channel reversal structure, and you know we love trading these structures. And then we find the liquidity capture from MTI, beautiful, right? Price pushes down, that's a beautiful push down to the H4. And so now we are literally primed, right? We're ready to look for our bread and butter trades, which is the first flags to the downside. And so on the 1 hour chart, we actually get just that, guys. I'm so pissed at myself. We actually get this, and I was actually in front of the charts, but for some reason, like when I was looking at this, the liquidity capture at, okay, let me just show you, right, exactly how I was thinking. When I saw this candle close right there, in my head, I just thought like, that's fucked up, man. This structure's broken, right? And to be fair, most of the time that's true, but there was a key piece of information that I forgot, essentially, which is Mondays, they tend to create more volatile completions of structure, just like this. Because usually when price captures liquidity from this candle, we don't expect the next candle to print an even stronger bullish candle to break out of the structure. But I know that Mondays usually do give like more volatile shit like this. As long as we get the rejection candle afterwards, which we did, it's actually legitimate entry. But for some reason, guys, like, and this is a human error that I admit, I did not take this information into account on the Monday. And so once I saw this, I literally just threw away the pair to focus on the other pairs. And yeah, dude, like it just appeared. And this is what the trade would have been. Look at this. Literally, guys, look at that. It actually overshot my target by a lot, as you can see. It went all the way down there for a total of 11%. Like, dude, this is literally our edge, guys. If you've been in the vlogs, you know. I would be taking this trade. So yeah, honestly, like it did make me sad, but I want to punch home a really important point. It's like moments like this, when you miss a good trade or when you take a loss, these moments are what separate the profitable traders versus the unprofitable traders. And I can boil it down to one very simple point. We don't let our mistakes ruin the whole day or even the whole week of trading. We process the mistake. It's uncomfortable, yes, very much so. But we process it, we own up to it, we journal a lot, right? Writing it down, whatever shit is going on in your head after you make a mistake or you take a loss, please write all of it down. Your journal isn't supposed to be something that's pretty. Nobody else is gonna read it except for you. So the purpose of it is not to look pretty, but it's to process the emotions that you inevitably feel in this job. It can be pretty tough, and that's what it's for. So journal your emotions out loud, right? Just talk it out like, fuck, you know, it's like, swear all you want. as long as you take those 5-10 minutes to really process it, and then after you do that, you can come back to equilibrium. You're like, all right, this happened, this is the job, this is what I signed up for, I've learned from my mistake, I'm going to review it again later if I need to, and usually, yes, I do. I review my trades many times. But after that, you know, you can just let go. You've done what you can. You're human. You'll make mistakes. And guys, you will still be profitable even when you're making mistakes. You don't have to be perfect in this job. You just have to have character to fight through the hard times. Nobody's asking you to be perfect. Just have character. Okay? Don't be a little pussy. If you make a mistake, if you do something wrong, learn from it, chin up, and keep fighting the good fight. I'm going to take a sauna right now. I guess that's another way I kind of just like let go and process. You know, this week has been tough with this missed trade, and now I just took a loss from it. Yeah, ending the week at like minus 2.3K. Not fun, you know, not fun. And the days in between was also very hard. So no trade opportunities, you know, very dry. So one of those tougher weeks, just being real. So we're going to do a sauna, we're going to chill. And tomorrow we're going to play some paddle with the friends, right? Just, you know, just live. Just live. Remember, guys, there's always the next day. Live your life. Have fun. Laugh or cry. One of my paddle partners is here because we're about to go on an online meeting with a potential F&B partner. Because, you know, in a paddle place, especially the one we're building that's pretty big, we want to have F&B partners to serve the coffee, all the matcha drinks, the food, you know. So yeah, let's get that done first. Inception. Oh shit, he's here. What's up, man? How you doing, bro?
What's up, brother? Really good, man.
Bro, this is my partner, bro. One of them. Rainer.
Hello, bro.
Hey, man.
How are you?
Right. Jadi gini idea, we wanted to show you what the place looks like, right? So you get the vibe of our place and you can decide kayak whether it's a good fit or not with operations of your restaurant. Ya itu lu. Tapi then everything else like furnitures and stuff, it'll come from us. So you don't have to spend anything.
To go cafe kind of vibe, you know, so we are already planning.
I'm not helping at all. I'm just recording. How is it, mate?
Very nice.
The day. All right, we're now back for dinner, and let's talk about our Aussie dollar trade. So going from the daily here, what do we know, right? Price has bounced from key support very beautifully here, and it has since continued the upside move to show us that it is committing to target this key resistance level there. So we have this relevant higher time frame uptrend to give us the bullish bias, right? The next thing we see is once we get to the 4-hour, we see that price has also cleared our L2B here very nicely, and it has since consolidated above it, which gives us the opportunity to take long continuation plays. On the 1-hour chart, this is what we get, right? So this is where, well, I wouldn't call it a mistake. It's more of a higher risk variant, right? So I'm not as surprised that I took a loss, but it's the job. Losses are normal. So here, note how price initially broke out here and retested, right? So it broke out, retested, pushed back up to clear the highs just a little bit, pushed back down to retest, and then pushed back up again to break out of the local highs one more time. So we love seeing price breaking out of local highs multiple times when it's breaking out of the POL here. Okay, that shows us that price is strong, that it's committing to the upside. Now, the error that I think I have, right? Because usually the trade will have our continuation clearly above, okay? So what that means is, let's say this is the local high, our continuation will be here. This is the clearest entry model, right? Which is where I will go full risk. And that's why this time I didn't go full risk. My full risk is 3K now instead of 2K. And so this, we didn't have a continuation above it. The continuation was actually falling back into range, right? Which shows a slightly weaker bullish bias in the lower time frame, because the stronger bullish bias would have been price just making the continuation clearly above the broken local highs. That shows more confirmation. So the reason I still took it anyways was because we had this really strong H1 override, beautiful bounce there. And once we get to the 15-minute, we also see that price had a weirder MTI structure, right? I'm using this origin point, which is not great, to be fair, but we also had a really strong bounce on the 15-minute here. Beautiful hammer to capture liquidity from the lows into the local lows here, just tapping it and instantly pushing up. That's a beautiful development on the lower time frame. So we have conflicting information here, right? Some are good, some are bad, and that's why this is a higher risk entry, okay? Took the L here. Do I regret taking this trade? At the moment, no, because the data could have gone either way. But at this point, I'm starting to suspect that I prefer taking my continuations in longs above the broken highs instead of price coming back down into range and then taking it from there. I don't think that's as good. So yeah, I'm gonna start back testing this information over the weekend and see if this holds up, right? But I already have the suspicion, meaning now I know what I can potentially learn from this loss. And this is exactly how you should navigate your losing trades, guys, right? It doesn't always have to be the clearest answers right away. Sometimes it's more of a suspicion like, how come my winning trades don't look like this, right? This little variance is causing maybe a couple more losses that the best variants don't usually give. And so that's where your suspicion begins. It's like, maybe this variant where price breaks back into range instead of giving it above the broken highs is not as good. And so maybe if I confirm that over the weekend with my backtesting, then I will stop taking it. That's how you refine your edge, guys. This is the real. Giving you the 100% real of what trading for a living is actually like. Losses are normal, but as long as you can learn from them and you don't let the losses spiral into more bad decisions, that's the key. You need to be calm, relax. If you lose, it's a part of the game. There's nothing wrong with you, mate. Underdogs. Clearly, I can't play paddle with these.
Your goal is either this or this.
Yeah, I think that's pretty cool. 40. Which one? This or this?
This.
A few moments later.
So, you have seen the picture. Yes, a ball hit my eye in paddle, dude. It was not good. I was like low-key blind for the next 24 hours. Went to the hospital. They gave me meds. They did a bunch of testing. It is now 3 days later. I still have to wear these shades because I can't really see bright stuff. And I also can't spend too much time on the computer, right, to let my right eye heal. It's not as red anymore, thankfully, but it's still like not back to normal. But recovery's good, so I'll be okay. Now, back to the stuff that you all actually care about. I just got into a trade here on Pound Aussie, as you can see. We are still running a little bit in profit. Literally just tagged into the trade, so we are not at break even just yet. Still fresh, and I will break down this trade for you later. Because right now I need to rest. I've just done my whole deep forecasting. I've been on the charts for like almost an hour, and I'm starting to feel like the exhaustion in my eye, and I don't want to get a headache, you know, because that's what's gonna happen. So I'm just gonna chill, watch some TV, eat some halal, guys. You know how it is. I'm gonna see you later. I can make money even when I'm blind, bitches. I'm joking, I'm not blind anymore. Recovering though. Anyways, Pound Aussie, we're out already, and now we're in a new trade, Euro QE. All right, let's talk about our Pound Aussie trade. Starting from the daily as usual here, what do we see, right? We see this beautiful point of liquidity on the daily chart. How do we know that this point of liquidity is really, really good? It's because both moves of the upside and of the downside is extremely sharp. That's how you know this point in this market is very, very, very important, and it's a value area, okay? So we want to be trading from value areas. That's where our edge comes from. If we are not in a value area, then we're not even going to be looking for trades. That's how you avoid a lot of these unnecessary losses from shitty trades. Very key tip. So we find our liquidity capture here. That's great, right? Once price captures liquidity from our value area, that is the ideal scenario for us to start looking for continuation plays in the lower time frames. Now, the difference in this trade than most of my trades is that we are not trading high up in the move. Usually we trade very aggressively around this area, but I did not find any entry criteria here. And so no FOMO, you know, you can see like I did miss a big part of the move, right? But that's honestly, guys, that is the reality of trading. You cannot expect to catch every single move every time. That's not what this game is about, and you can't do that. It's impossible. So let me show you, right? On the 4-hour chart, I had nothing. That wasn't a legitimate entry criteria for me. So obviously I can't break my rules, right? Or else I would be a noob and I would be gambling. So I couldn't take the trade there. There's nothing there. Even this did not form properly, right? Price never completed to the highs, just kept dumping down. Now, we finally find our structure in the mature environment of the move, where we are already pretty extended, right? We've already gone pretty far. Now, look at the 1-hour chart here. And if you've been in our vlogs before, you know that this is literally our edge, right? So if we see this in the market, we love it. And then we get this candle afterwards, which is our rejection. Now, is this rejection candle the best rejection? No, it's not. However, compared to all the goods that we have, for example, this is a very good quality structure. That's the first positive confluence. The second positive confluence is that we have confirmed that we are in a trending environment to the downside from a legitimate value area. Even better, right? We have a very strong hard time frame narrative as well, and this move is just continuing down. So when we have all those positives, one mild negative should not be enough to make you ditch the entire trade, right? If you expect perfection from every single trade, like nothing can go wrong, like there's no blemish that you can allow, then you will never trade, because the market is not a perfect mechanism, right? You need to know how to read between the lines, and that's what we did here. And this is how the move played out. Instantly just smashed my target, dude. Fucking insane. And honestly, guys, I undershot the target by a lot. So if we look at this, I could have, my max run would have been literally almost 10R. Once again, showing you the reality of trading. You don't always get the perfect moves. You don't always make perfect decisions. But the good news is that you don't have to be perfect to be successful. Guys, I can guarantee you that that's like big facts. You don't need to be perfect. You just need to be consistent and your life will be good. That's the good news. So that's Pound Aussie. We'll get back to the vlog. This one just started. Look at that, brand new. So I'm still trading here, guys. Today's a very busy day. Lots of movement in the market. So I'm gonna break these down after I'm done trading for the day, because I need my focus all up in here instead of recording for you guys. So I love you still, you know, but this is how I make my money. You know what I mean? I can't. Okay, now for the Euro Kiwi trade. Let's look at this from a daily as usual. We have our key resistance here. Price has captured just a little bit of liquidity, which is, okay, this is a very key lesson here, right? You know that oftentimes I love trades that capture more liquidity, something like that, before it starts pushing down. And so when we have scenarios like this where the liquidity capture is minimal, look at how small that breakout is from our value area. That actually does impact the quality of our trades in a negative way, in the sense that it's more likely for price to just make a mild downside move before eventually coming back up. And so it does increase the risk of our shorts a little bit. So you want to keep that in mind. As we move into the 4-hour chart here, we see that price is indeed pushing down nicely, but it is a slightly corrective wave, which unfortunately lines up with the risk, the concern that we have that this could shoot back up again, right? And so for that reason, we want to be a little bit more careful here. Now, once we get to the 1-hour chart, we actually do find a structure to work with here. That's 1, 2, 3. That's beautiful spacing in between as well. So this is a good enough structure, but I will say it is not perfect, right? Especially if you start comparing it with the other trades, even with Pound Aussie just now and all the other vlogs that you can access. This is not great because it is too slanted to the upside, right? It's way too slanted. So we have all these like mild negatives stacking up though. That's the thing. If it's only one mild negative confluence, it's fine. But you should be careful when these mild negative confluences start to stack up in each time frame. On the daily, you find one. On the H4, you find another one. On the H1, you find another one. That's actually like, yo, you gotta be like, something's not right here. So honestly, my mental capital at this point in time was also not the best. I was already kind of a bit tired. So yeah, I took the trade here, and then this is where I got tagged in to the pip. This is what price did afterwards. Now, after I saw price do this insane retrace, I was legit just like realizing that, okay, this trade is not the best quality because of all the reasons that I've mentioned beforehand. And so I decided to manually exit the trade, right? Because I realized that I wouldn't be happy with myself if I lost a trade like this. And I just wasn't really happy with the quality of the trade overall. And I just got a winning trade from Pound Aussie, and I really didn't want to be overconfident from my win, which is an issue that I used to have in the past. Like after I get a winning trade or a really good week, right, I would tend to give a lot of my profits back to the market from taking trades that are exactly like this. Like I know they're not as good as what I'm capable of, right? But I just become more relaxed in my entry criteria, in my discipline, because I'm overconfident. That's just the harsh way to say it, but it's true. And you guys have to be mindful of that. Like a lot of the times, even with my students, this is a very common issue that happens. And so you want to be aware of your tendency to be overconfident after you get a really good string of results. And so because of that, I just decided, you know what, I'm not gonna do that all over again. Even if this ends up playing out to the downside, like this is not really a trade that I should be taking at this moment. And so yeah, I just chose to save my mental capital. I chose to stay disciplined. I chose to stick to high quality trades, especially after a winning period, right? So I killed this for a small loss. Receipts up here, 430 bucks. And then this is actually what happened. It actually did play out, right? So yeah, did play out for a bit. I probably would have broken even though at this point, as you probably would have known by now how I trade. It's pretty consistent. Honestly speaking, guys, I just want to tell you how I feel, because that's the point of this vlog. I did feel like if this continued down, I would be a bit sad, being honest. Like I don't agree with any of these people saying like, oh, you know what? A consistently profitable trader never feels these emotions. We're way better than that. I'm sorry, man. I don't buy any of that shit. I don't even think they make money doing this. Okay, I'm just gonna stop shitting on these fuckers. But anyways, the truth of the matter is, this is where you make your money. It's literally my income. It's not realistic for you to expect of yourself to be like, oh, I don't care. You know, I don't care. I could have made $5,000. I don't care. You will. You will care. It's not about not caring. It's about accepting that you have emotions because you're a human being, instead of just like being in denial, because that never ever ends well. You tell me. When has being in denial ever helped you with trading? Never. I guarantee you, never. So instead of being in denial, you accept that you have those emotions. That's why we journal so much. That's the purpose of it. That's why we meditate as well, so that we're no longer afraid of the emotions. We accept them, we see them for what they are, and then we let go, right? We forgive ourselves for having those moments of weakness, but we don't let it fester. We don't let it build into tilt. That's the point. Okay, that's how we prevent tilt from happening. We just accept that, okay, you know, if this would have happened, I think I would have been so sad, you know, like honestly, I would have just stopped trading for the day if that happened, because I know like if I trade again, like that's when my mind is just not at 100%. I would be emotionally compromised, just not a good way to trade. So instead, if stuff like this happens to me, I would just go to journaling, right? I would just skip the day. Instead of trading live, I would just journal. I would just like, why did this happen? Did I make the correct decision by manually exiting my trade? Was it fueled from emotion or was it logical? So I would ask myself those kinds of questions. That's what a professional trader does. And it's not about being a robot. It's about accepting your emotions and then doing something about it afterwards. Instead of letting the emotions control you, you control the emotion. I'll see you in the next episode. We're going to Bali, baby. I am currently in a meeting right now before leaving to Bali. Just wanted to update you guys really quick. We got a live trade going on. Literally just entered the trade and instantly playing out. So it's in CAD yen. So far, running a profit of 2K-ish on one of my funded accounts. And I will update you tomorrow. It's getting so close, guys. The damn. So close.